Inflation in Singapore sped up to its quickest pace in 2 years in December. Data from the Department of Statistics showed that higher transport costs led to a 4.6% year-on-year gain in the Consumer Price Index last month. Now, for the whole of last year, the price index rose 2.8%. And the increase in prices was the most pronounced for high-income earners.
Analysts say inflation will continue to be higher in the first quarter of 2011 and will range between 3 to 5% before tapering off. They estimate full-year inflation at 3.2% in 2011. Transport costs galloped 12.8% year-on-year in December, led by higher costs of petrol and cars. Housing and food became dearer too in December. Housing costs rose 5.1%, food prices increased 2.1%. Inflation last month was higher than the 3.8% in November.
I think going forward, of course, the expectations is because this is a likely election year, there may be a little bit more policy focus on trying to breach, some of the rising cost issues for the men on the street. And I think in particular, for the lower income families.
Analysts say such government assistance could take the shape of healthcare, education and food subsidies, as well as enhancement of the Workfare Income Supplement Scheme. DOS says that the top 20% of income earners experienced an inflation rate of 3.1% in 2010. This is higher than the 2.4% inflation rate suffered by the bottom 20% of income earners.
In our view, the biggest risk still seems to be food inflation. Basically, not enough is being produced. And the fact that, over the years, affluence has grown means that the pattern of consumption is such that it's become a lot more demanding on producers. And so production has not kept up with demand. So given the confluence of these two factors means that food remains as the biggest wildcard for inflation.
Analysts believe that should inflation continue to overshoot, further tightening by the Monetary Authority of Singapore could be on the cards in April.